Hi, this is Stan Moore, New Era. I'm coming to you today with a brand new training film. This is going to be for a trend down day. It is perfect the way we teach it. It's written in the book some 5-6 years ago. And we start the day off looking at the overnight markets. Asia's up sharply, Europe's up sharply. And what's happened is China reported their PMI, and it was down over the previous month, which is good. Markets will look at that as a sign that China may be engineering a soft landing, won't have to raise much more in rates. And you can see the market makes a new high. This is the close of the previous day, right in here. And this is today's high. And this is testing back. This is testing back right here. The previous high here on 222. And it's an 80% of the high of the previous day, the 21st. So we're looking at a market that's starting out high. Now I want to point out something. We have leading divergence. That is when the oscillator hits a high, it gets jammed. Very strong markets, jam. Very weak markets, jam. See, it gets jammed down here. And then we get divergence. But here we get leading divergence. That's where price makes an equal or higher high. Okay, the indicator never gets to confirm that. See, we have divergences normally, but this is leading. Here's leading. Okay, this is leading divergence, nails the high. See this? Here the market goes back to the high, and guess what? We should be short there. But anyway, we short in here. It doesn't matter. So what happens is the market has gone back. Now I'm going to move to the 5-minute chart and show you where we are. Normally I would fake this out, just put a little block here and then move it to the right, but you'll get the point. Okay, here we go back to 80% of 218, retest failure of the previous day. Okay? Now, the ADs are flat. In other words, basically the advanced lines are even. Market's probably going to have very little chance to go up, although it does rally because of oil being lower in the previous night and all the good things I told you about China, Asia, and Europe. The market rallies. I'm trying to buy puts. Believe me, 1 bar up, straight down, never got a chance. Okay, so the market comes down to 40% of the high of today to the low of yesterday, rallies 40%. Now you're starting to see we're rallying 40% of this range. This is getting very weak. We should be rallying. For this kind of market, we should be doing better. This is right off the box telling us something's wrong. The market's very weak, that we can't even take out. We're making lower lows and lower highs. Not good, guys. Not good. Right away, and the fact that this is down so much from a gap up, not good at all. Hey, right now, oil is starting to rise. It's going from 97, 98, probably pushing 99 down in here. Now we come all the way down. Now here is the first big buy area. Retest failure of this area here, 40% of 224. So we're now from the 24th low on the lower left to the high of today, right up there. Whoops, I lost my mouse for a second. Okay, right here to the high of here. This is 40% of that range. So you're down from down here somewhere to this high. You're now 40%. And you got a nice balance bar. You know, big red bars, nice balance bar. Buyers and sellers are in balance. Okay, the color tells us probably going up. And we also get divergence. See the difference here? No jammed. Anything at this line or higher is jammed. The difference between overbought, oversold, and jammed is the market when it's oversold, this is more indicative of trading range. Okay? When you start getting jammed, you'll see starting to trend and only recovering to a certain low number. So here we go up, we start shorting at 40 of the day, it goes a tad higher, get another balance bar, next bar is red, another balance bar, it's pretty much over. And guess what? The oscillator went to 62. Sign of weakness. The market continues to come down. Now, we should have bounced here. It's a nice retest failure. Okay, we have 2 reference points, 1, 2. This could have been easily an opening range breakout down here. So we take out the lows, 2 reference points, 2 lows. I marked a turtle bisque. In other words, it's like when people buying, let's say breakout levels, okay, this looks like support. And then all of a sudden the market breaks through, market comes back in the body, you know, its previous body in here on the left. Okay, we come down, we break outside the, you know, support. We now have either opening range breakout, could be either one, or turtle bisque break. Okay, either way, this now becomes resistance. Then what happens is we come down to 50%. Here's 40% of 224, here's 50% of 224. Now because we took out this low, we can now start projecting where this market's going to go. So if it becomes a normal decline, we're looking for 100% retracement. Okay, so from here to here to here, we are looking for 100% retracement, 13.9. Okay, so that's basically our target now. We're working our way down. Now we come down to that 50 I talked about, we can't rally. See, the market's jammed. Should rally back to here. But it is so weak it can't get out of the way. And plus we broke down. We just want to keep shorting rallies. Not the greatest short. See, the oscillator isn't back up in here or here. But anyway, we come down, make a lower low. Beautiful. Marginal low. Love to play marginal lows. Got a little, cross with divergence. Here's the oscillator. Here's the moving average. We crossed over. We got a low point, higher. We got lower low. Nice retest failure. Crossover with divergence. Bang. We get a 4-point trade. Oscillator goes to 62. Price goes back to the mid-uni. Price does a shallow back. So what we have is an oscillator jammed in conjunction with a 21 exponential moving average showing trend, in this case down. We end up with a 40. So that combination of jammed, 62, 40 mid-uni, those things come together, we got to sell right here. 40% of this leg from here to here is 40%. The ADs now have gone from flat up here to to 1 to 3, one stock for every 3 down. Sell rallies. Okay, it's now getting ugly. We broke under. This becomes resistance, so we want to sell all the rallies. All right, we come down again. Nice divergence. Should get a bounce. Guess what? 2 blue bars. Forget it. We come back to the line. Hit it. Okay, we get close to a 62. Just hit it. Isn't that amazing? The market rallies all of 2 points. The oscillator goes to 62. This is going to be a 30-point day, and the oscillator goes back to 62 on a 2-point rally, telling you it's weak. That combination of mid-uni, shallows, 62 jammed is incredible. And we go down again. Okay, hit our T2. Normally we should get a bounce. Okay, we try it here, we try it here. Here's time of day. Where the market should, after this kind of down, should bounce back, especially off a big target. You can see this target was really picked up by the market. This is about a 3-point range. And you can see it's from roughly 1 o'clock. No, let's move it over here. 1:30, it runs to, this is an hour where the market moves sideways in recognition that we're at a good buy. 60% retracement, we're jammed. Okay, again, look at this, another 2-point rally. And the darn oscillator goes from jammed to 62. That's incredible. 2 points here, 2 points here, 2 points here, and you just sell. 1 sale, 2 sales, 3 sales, 4 sales, 5 sales, 6 sales, 7 sales. I mean, just following the mid-uni combinations of shallows. Now, I put this as a 40 ID. That's not a 40 ID, guys. I'll just show you. No way. See, that's what I thought. Something I didn't mark it right. That's okay. It's a 40S. All right. So anyway, we keep selling. Here, 2 o'clock time of day. See, TOD time of day. Market should have rallied. Went sideways for 20 minutes. Forget it. Get out. We have what we call time stops in the book. That when you're counter trend trading, which is counter trend, the market's down, we're buying. We're counter trend trading, looking for it back to here. Okay, guess what? If we're in a trade 15, 20 minutes and we're not making money, we don't wait to get stopped out down here. We just exit the trade. Then again, miracle of miracles, we get jammed down here, really jammed. Okay, you see the difference between this jam and this jam. This is much lower. But anyway, it's just telling you it's jammed. Now we get a nice 3-point rally. Nice 3-point rally. And guess what? We can't even penetrate this. This is a weekday. 85% of the people day trading generally close out before the end of the day. You would think after this kind of decline, the shorts would be happy to button up the profit. So we end up thinking maybe, just maybe, we're not blowing out the low. We're getting a marginal low, getting a little divergence, not leading divergence, get a little divergence. Okay, we can buy this. We can cover our shorts again. And guess what? Rallies to a 40S. Okay, 40S, not a 40 ID. 40S, small. Okay? And we guess what? Didn't quite make it back. Intra-bar, it made it back to 62. But when it closed down, see this bar closed down, it never got a chance to get up there. But we know to sell this. Oil's going out at the highest close since September of 08. This is really ugly. It's over, tonight we're down about 3.5 in the overnight session, and then oil's at well over 100. I think it's about 140, 150. So that's probably why we're down a couple of points overnight. And then look at Look at this. We're trying desperately to push up. We can't push out. Just can't get up in here. We should be up in here, guys. You know, if all the shorts are coming out, booking their profits. But it's so bad, guys. Look at this. This is down 7 points. It's just getting killed. You can see it jammed again. So you still want to, looking tomorrow, you probably want to sell rallies. Same thing. You just want to sell rallies. So when you put this whole thing together, I told you the fundamentals pointed to a higher opening. You know, Asia, you know, highs, Europe highs, oil prices coming down, everything fine. And all of a sudden it starts turning nasty. Oil starts rallying. Rumors of the, I told you, the Saudi tanks and soldiers going into Bahrain. Okay, enough to pop oil. Oil's now $99. But you get a relief rally. But the key is, look at this indicator. We're making lower lows the entire day, lower highs the entire day, and the oscillator is trading between jammed, which is -1, 62, jammed, 62, jammed, 62. What indicator in the world tells you that? What indicator? Now notice it was so bad, we didn't even buy this divergence. We didn't even buy the divergence. We just let it puke out, let it go to hell. It was so bad. As I said, this should have been up in here at the end of the day to relieve this oversold pressure. But the momentum was so heavy down. And forget it, you can't fight that thing. And once everybody gets on the wrong side, they're just going to punish them. I think it's the first day of the bear market. The bears have been rewarded, other than, I think it was April of last year. We got a big down day. We had a slightly big down day, you know, back in January. But this was vicious. This was absolutely vicious market. So again, guys, thank you. Just want you to see trend down, perfect trend down, combinations of things, and how well it works in conjunction. You just sit here and sell all the rallies back. Now, in conclusion, one thing is, normally there is one trade along this line that you'll lose money on. But you've made 5 or 6 winning trades. You don't really care. Today, it wasn't the day. That's what I said. I didn't short this because I thought it was going to come back up, and I said, the heck with it. It's got divergence. I'm not going to play it. So I left some money on the table not shorting this. Okay? So you get some idea that you tried to avoid the loser, and you missed one of the best winners of the day. Just do it. Just do it. When you get into these trends up or down, this oscillator is so powerful, and you're watching the ADs, and you're watching oil close the highest level, you don't have to buy it. You know, you just get out of the way, but you just want to keep shorting it. All right, guys, thank you very much. Until we do another one, I hope you enjoyed this, and good trading. Thank you.